Hi there, tech lovers. I'm Andrea, and this is Venture Talk by Techcelerator. This show aims to provide you with strong insights on building a startup, lesson learned, success drivers, and of course, tips and tricks for you to achieve your goals. Today, we cross the SEE borders, and we have the pleasure to dive into the worldwide investment landscape with Marvin Liao, investor and executive coach. Marvin is a partner at Diaspora VC and board member and partner at GameGroove Capital. He was formerly a partner at 500 Startups. Marvin, thanks a lot for taking the time to have this discussion.
Thanks for having me.
So you spent 6 years with 500 Startups, traveled the world, and decided to move on despite having a good portfolio there. I was wondering what is your new passion after moving away from 500 Startups?
I think you kind of get the entrepreneurial itch, and frankly speaking, sort of, it was 6 years working at a place is like a long time in Silicon Valley, right? So, ready for new challenges and adventures. And so one of the things, the gaming industry became very interesting. That wasn't something that 500 did a lot on. This is why I joined two friends of mine, sort of to run this gaming holding company, investing off the balance sheet. And also sort of like joining with my good friend Carlos to sort of do this rolling fund. I also have an angel fund that's called like Sukna Holdings that I do with a friend of mine from Saudi Arabia. So, maybe I can invest, talk about the portfolio, sort of how I sort of like manage my life, right? So I sit on like 4 different investment committees at different VC funds in, all over the world. I have my angel fund, which I invest in seed all the way to sort of like Series F, very opportunistic checks. And then I have Diaspora, which actually focuses on pre-seed. It's European pre-seed founders coming to the US. And so I have this like very broad portfolio of sort of different types of investments. And I realized I'm a generalist. And so I like a little bit of everything, but I don't like sort of like overly sort of like specialized in one thing, right? So I try to do a fairly broad sort of like type of investing. And it's been fun, right? Because you're learning stuff all the time. And so I think it's sort of like chasing adventure and chasing learning.
Yeah, that's right. And because, as you have mentioned, you have a diverse area of interest, and you have a special way of approaching different geographies. And for those that aren't aware, you are one of the few San Francisco-based investors who regularly checks Eastern Europe, MENA, and other still developing countries. Is innovation easier to spot in such an environment?
I would say yes and no, right? Because I think one of the advantages or disadvantages of just there's a lag time between Silicon Valley, and sort of like I would even say East Coast of the U.S. and then from the East Coast to sort of like Western Europe to Eastern Europe, there's this lag time, right? So there are certain advantages, but then one of the challenges is sort of even if you see a trend, even if you see an interesting company, the big question is like, is this the right founder to sort of like do this? Do they have the not just expertise, but like, can they surround themselves? Can they build a team? Are they able to sort of like learn and grab a lot of those best practices? And that's harder to figure out. But as you said, I'm super bullish on sort of like all sort of the tech ecosystems everywhere, right? And I've spent a lot of time in the CE region. I'll be coming out in June, actually, particularly Romania. Like I'm very, very bullish on the CE region in general. So, like Bulgaria, Romania, like Hungary, Czech Republic, like the whole region overall, Ukraine still, right? Like I've also invested in a lot of companies out of Russia. I probably won't invest in Russia anymore, but I'll invest in like Russian founders coming to the US. I've had great success with a lot of them. And, at the end of the day, sort of, being able to differentiate the people from the country is actually really important.
Yeah, this actually brings us to an interesting topic. Silicon Valley is innovation driven, but it's also driven by buzz, and fear of missing out is present in all sectors and at all levels. Sure. When it comes to how do you choose to invest, how much of it is influenced by data, how much is gut driven, and how do you cut through the buzz to get to the truth?
Oh, that's a great question. Boy, I wish I had a great answer for that. I mean, the reality is just, I think you just learn, you try to think for yourself, right? I try not to get caught on FOMO, right? I don't go to the parties that everyone goes to. I try not to hang with other VCs where possible. Like I have a lot of VC friends, but ever since the pandemic, I'd definitely say since the pandemic, you spend a lot more time sort of like thinking for yourself. and trying to sort of like parse out the garbage from sort of like, the buzz. I try not to get caught up with, I've done it before, right? You get caught up in the hype. This is, I think, one of the reasons I don't think I was as good of an investor. I don't know if I'm a good investor, but I don't know if I was as good or experienced an investor when I first started. And in the beginning, the first, as an angel investor, I was a terrible angel investor. I would say my first year investing was not very good because I didn't know anything, but also it's just so easy to get caught up in the hype. And I think I learned from that, where it's just like I made a bunch of investments that were like super hypey, and I didn't necessarily sort of like learn to think for myself. And then when you see these investments not do well, you're like, okay, like you learn, right? Like you become a good investor by making sort of like bad investments. I genuinely think that.
And what's the most important lesson that you have learned during all these years?
One of the things that I don't get caught up in the hype. So I try, like, where I've done well is I try to invest in either sectors or geographies that are typically sort of like other investors hate. And partly because they've missed something, right? Or partly because of just like bad experience from the past. But they've overlooked certain things, right? Of just like, so, a lot of times, like you look at sort of what's changed, right? Like, has there some major trend that sort of changed? So I look at trends, so one of the tricks I've learned is like, you look at sort of something that was like super sexy and hyped like 2-3 years ago, and I specifically look at that sector, because a lot of times you go and dig into that sector to go and find out like, okay, has there been something significantly sort of like different than like, say, what happened like 3 years ago? What has changed, right? And so that's sort of like, that's one of the reasons sort of like I think I look at like the CE region, where it's like there was a little bit of hype before, it's kind of died down a bit. And so now you're starting to see sort of like really interesting sort of like stuff popping up again.
Yeah, and I have a follow-up question related to this one, because Silicon Valley, and not only, I would say that most parts of the world are quite cyclical when it comes to, I don't know, AI, life prolongation, saving the planet through tech and stuff like that. And I'm asking you for an opinion here. Is it a good thing that great ideas, while they might be shelved for a while, they are picked up again and worked on them with new tech approaches?
Yeah, I think it's a great thing. I mean, here's a reality of technology and the technology business and investing, is that, somebody said, I couldn't remember, it's like, I think Bob Metcalf, the guy who started like networking back in the day, like networking products, and like Cisco, what Cisco does, right? And one thing he says is like, innovation is like a bed of weeds, it's not a flower bed. And it's really true. Like you see lots of companies in, say, like search engines, but it took Google to basically sort of like grow that. That's a bad analogy, but like that's the example everyone uses, but it's kind of true, right? Like they were like the 18th or 19th search engine, so a lot of times it came with a new approach that was just way better and built probably easily one of the best businesses in the last like 20-30 years. And so I do think about it that way, where and this is actually where I think being experienced, I've been here now 22 years, so that experience is helpful, but it's also negative as well too, because you're like, oh, I saw that, like tons of people tried that, like that's just not going to work. And sometimes you have to sort of like, you have to force yourself to sort of like look at a deal, look at a sector with fresh eyes, right? And not be jaded by sort of like, oh yeah, like I've seen so many companies try that, nobody's succeeded, so this is why you're not going to succeed. And this is actually, those are usually the best deals, right? Like those are the deals that actually do really, really well, where yes, everyone else has tried this, but we're taking this brand new approach, or here's what's changed in the market, or here's what's changed trend wise, that will make this successful now. And so you always have to look at it with sort of, it's so easy to get cynical when you see this, right? Like with this experience, and I try very hard to sort of like look at it, with sort of like fresh eyes, but it's tough.
And do you see something interesting that is being picked up again these days, and I don't know, has a lot of potential and maybe in the past didn't work out?
I don't, I would have to think about that. I would say nothing that jumps to the top of my head. I mean, and that's one of the reasons I still do a lot of like the basics, right? Like super unsexy things like SaaS, enterprise software, like developer tools. Like they're like, isn't that done already? I'm like, yeah, but there's just still so much room for like innovation in these areas, right? Like the enterprise software, like there's still awful experiences. Fintech still, right? Like fintech is so big right now, but there's still so many interesting spaces in fintech overall. Like you would think like fintech right now is like for every $5 in venture, like what $1 goes to fintech. So you're like, oh, it's probably done already, but there's still so much opportunity in it. So, you know, I would say those are probably the two of the biggest areas I'm still looking at very, very deeply.
And what's the hottest sector right now, in your opinion?
I still feel like, you know, my sense is still like Web3 still seems to be some of the stuff I'm seeing in Web3, which just seems really crazy to me, still seems very hypey and very bubbly. Still doing deals in it because there's a lot of smart founders and a lot of smart people working on it. And so this is what we do in startup investing: is you're betting on smart founders in interesting spaces, right? And hoping that they figure out sort of like interesting businesses that can sort of like be the next sort of like dominant players in the next like 10 to 20 years. So we've done, you know, at least at Diaspora, we've done like 3 or 4 Web3 companies. I still think overall 90% of the space is just total garbage and scams, but maybe that 1 to 10% could be something, right? And so, you know, we're seeing a lot of smart people in this space.
Going a little bit back to the subject of fear of missing out, I know that the most hated deals by the VCs are the last minute kind of deals, the yes or no right now kind of answer. And everybody gets them from time to time, but nobody likes them. And yet they happen on a daily basis successfully.
Sure.
Can you comment on the startup perspective now, when and how to use such a tactic with VCs?
I mean, the thing is just, you know, there's typically this, what I call like the 60% rule. Typically, let's just say I'm making this number up, right? Let's say you want to raise $1 million and you already have like $600,000 like firmly committed. It's pretty easy for you to go and tip and get the rest of it, right? Then the question is sort of like, you know, then the question comes down to how you construct a round and who you let in. And so the benefit of these sort of like last minute deals is just sort of, you know, you start driving the FOMO in the investor base. And so you start to be able to sort of like pick and choose who you let in, or how much you allocate to these investors. And that's actually great. That's a great situation to be in, because then you can really, you know, like if there's somebody where it's like, okay, great, like they have a great brand name, but I don't like them, then why take their money, right? Versus say taking sort of like money from say operator angels. And so you kind of get, you know, at least in Silicon Valley, you kind of are able to sort of construct these rounds where it's like, okay, great, like brand name VC, maybe take in a bunch of sort of like really good sort of like small checks from sort of like really good angels that can potentially be helpful, or even operator angels that may not have like sort of great brand names, but you know, that you know have like real deep sort of like expertise or vertical expertise that can be helpful for you. You can sort of start to construct these like interesting rounds of people around the table that can actually help you with your business sort of after the round is closed, right? Or like good advisors that people can actually legitimately be hands-on helpful for you. That's a good thing to do, right? But the idea just sort of like you want to be able to, let's say for a $1 million round, like it'd be great if you can actually, you know, assemble, you know, like $2 to $3 million around you that you can go and pick and choose, right? Like that's an amazing situation to be in. Or maybe you increase the size of the round, right? Like that's great. You know, more money sometimes is better, not always better, but more money sometimes is in certain situations can be better. Or you get to be really choosy about who you let in, and that's also great too.
And because you have talked a little bit earlier about your portfolio, I was curious, in your portfolio, on the side of those who haven't made to the next round, do you have anybody that sticks out as a good idea, great execution, and yet something went wrong? Can you tell us a bit more about this?
Yeah,
if you have someone in mind.
Yeah, I don't know if I have anybody particular in mind. And, you know, this idea is sort of like good idea, good execution, but something going wrong, like that happens. That's every company, right? Like that's every company in the startup space. And so, and I don't want to single anybody out, because just because you're great at fundraising doesn't necessarily mean that you're like really good, you know, like you're going to build a great business. I have lots of companies who've raised from incredible investors that end up going nowhere, right? Like either due to poor execution or just bad luck, right? Or bad timing. Could be a bunch of these things. And so, you know, and I have a bunch of companies that maybe not have raised from like great investors, but like have built like very significant, you know, like 5 to 10 million in annual revenue. So, you know, so I would say sort of like I've seen both, right? And I don't necessarily fundraising really, really well with running a great business, that isn't always the same thing. Like, I have some businesses that have built incredible businesses having been good at fundraising, right? But I don't know if I equate sort of like fundraising, I don't, the two things aren't the same thing.
Mm-hmm. And changing a little bit the subject, what do you think about NFTs and where do you see them heading?
Like I said, I think it's an interesting concept. I think NFTs make sense in some situations. So for example, if you have a community, is basically sort of a great way to signify sort of your clout, right? Like online, it could be the new digital ID. I think a lot of, I said this with Web3, like Web3 is, I do think it's sort of like a lot of that centered around NFTs, a lot of that centered around community and digital identity. But unfortunately, like I think like 99% of this stuff is garbage, or a lot of it's just like these fast sort of like scams, right? Or sort of like money grabs. And so I do think there are some projects that are very, very interesting where it's like legitimate sort of like community, So for example, like Board Yacht Club, I think is interesting, right? Like that's a really, interesting example where it's like, wow, like that's a real community they're actually building up, right? Like these are super fanatical people that, and the idea, just like you can tell with sort of like the ID that they actually have of like, wow, you were like very early, or you have this very distinctive sort of like Board Yacht Club, like this ape that you have, right? Which is crazy, but like it's no different than somebody having like a very expensive handbag, right? This is just in the digital sphere. And so I think like it's super promising. I do worry it's a little bit overhyped, and I do worry about the scam artists. There's just so many scam artists in this space right now, but that all gets washed out, right? Like that happened in 99 2000 with the first .com bubble. Like it happens with every single sort of like sort of like boom and bust cycle, and so a lot of the garbage will get washed out, right? Like as it always does when there's the inevitable sort of like downturn happens.
And because you have mentioned about Web3 and I understood that you see a lot of potential there, I was curious that in the current context of geopolitics, inflation, supply chain, and resource issues, what are some areas that will birth the next unicorns in a short amount of time? How are you searching for unicorns these days?
I have to say, I really hate that term unicorn, right? This idea of sort of like billion-dollar company, because, there's something like 400 unicorns out there right now. And the reality is just like a lot of them really are not, right? Because it's just like they're valued at over $1 billion, but like they don't actually have the revenue business to sort of justify it, or the business model to justify. And I sincerely believe, justifiably, I think a lot of them, the market's starting to talk now. I don't think a lot of them are going to be around like in the next like 2 or 3 years, because they don't have sustainable businesses. And so, for example, like there's one unicorn that's in my portfolio. It's called Shippo, and they have a real business, right? Like they're profitable, they're making a crap ton of money, they're growing like crazy. Like that's a real unicorn, because they're growing into, like they've grown into that valuation. I can't tell you what the revenue base is, but like it's very good. It's very, very good of what they built over the last while. And so even if they don't raise any money forever for like the next like 5 years, like they're going to be fine, right? Like partly because like they have a lot of money in the bank, but they're profitable, right? Like they're profitable. And this is one of the problems of just like, there's a lot of companies that you look at and you're like, that business model, like how can you be a unicorn when you're like 100x of revenue? Like that makes no sense to me. And you're not growing at the pace to sort of like to be able to hit that valuation, and you're burning crazy amounts of money. Like I don't understand. Like that makes no sense to me. And maybe because I'm old, right? But I saw this back in 2007, 2008. I saw this back in like 99, 2000. And it's crazy to me that it happens again. People have short memories, but it's just like it happens again. So it just seems nuts to me.
Marvin, I'm not saying this because you are old, but you haven't got much left to prove. I mean, you are an amazing investor. What keeps you in the game? What are you passionate about?
I don't feel, if I'm very honest, I don't feel like I'm an amazing investor. I think I'm an okay investor. I think there's way more investors. Like there's hundreds, if not thousands of investors, I think, that are way better than I am, at least here. And so I don't feel like I've made it at all, anywhere close, honestly.
Okay. And I have a last one, and we're good to go. If you were to get back starting a company, would you do something small that you are passionate about, or aim to build a giant from the beginning?
I don't, honestly, I hate that word honestly, right? But just like I don't think I've seen a lot of people start like look at wanting to start these like small companies that end up turning into sort of potentially large companies like this bootstrap. And being bootstrapped doesn't preclude you from being very, very big, right? So for example, like Calendly started off as like they raised like less than I missed that deal, right? I talked to him. I remember I was like, valuation is too high. Like he raised like less than $1 million, and now they're probably worth like, then I think his last round he raised like amazing product, amazing founder, and it's one of those things. So it's just like, yeah, like I don't think people expected this to be a massive company, but he was able to do it like with raising less than $1 million. So I think, I wouldn't preclude either one. And I'm going to answer sort of like a combination of sort of like your first, your question, or your last question and this question, which was, what would I do where like, what keeps me in the game? Like, working on stuff that's interesting, right? Like I would say, I love working with founders. It's super interesting. You learn new things all the time. And I love the game. Right. So it's like, I heard this like Def Jam Records, if you're with Def Jam, right? Like they have this like quote that I heard, and it really struck me because I'm like, wow, like it's kind of why I do what I do. It's just like, we make music to make money so we can make more music. Right. And so it's just like, for me, it's just like, I do startup investing so I can make money so I can do more startup investing. So it's like this like infinite game, right? Like I love the game. You learn a lot of new things all the time. It keeps you young. And part of it also, I feel like I've improved myself, but also part of it just like, you enjoy the game, right? And so whether it's doing a startup, whether it's investing, like you have to love the game. And for me, whether it's starting something small or going big, like it would always be around something I really, really am very interested in, right? Like I really believe in, or something that I just think is fun. Because at the end of the day, money comes and goes, but all you have ultimately is your time, right?
Yeah, that's right. Marvin, thanks a lot for this great conversation. It was a real pleasure. And I'm looking forward to have you in Romania.
Yeah, I'll see you. I think I'll be there June 23rd or something like that.
Yeah, sure. It would be amazing.
Yeah.
And of course, for those listening to us, don't forget to give us a like and subscribe to our YouTube channel. And Marvin, I think that you wanted to say something more.
No, subscribe. Click the like and subscribe.
That's great. Thanks a lot.
Thank you.